So welcome everyone. I hope everything is absolutely proper. I guess we are live. You can just confirm whether you can see everything very properly or not. Good evening. Good evening. Yes. I guess it is absolutely clear. Okay. So welcome everyone. Let me start the session. So, good evening everyone and welcome to this session. Welcome to this amazing session on CA Final Financial Reporting, and I hope my audio video is absolutely proper, right? So, welcome everyone to this session. So, today is our day 2 of CA Final Financial Reporting batch, right? Before starting today's batch, I would like to ask you one question. Whether you have revised yesterday's content or not. Just tell me yes or no. Whether you have revised yesterday's content or not, you have to answer me. Okay, because as I had already put much emphasis yesterday on revising the content, so have you revised it? Okay, student says yes sir, done. Yes, revised. Yes sir, done. Okay, Supraja, okay, Ima, okay, Nishuda, okay, Srinivas, okay, all of you all says done. See, this is what level of commitment is required from you guys. If you are revising it on a daily basis, this is the only thing which I will require from your side. That's it. Right? So I'm super proud of you if you have revised yesterday's content. If you haven't done it, please do it from tomorrow or do it from today itself. Okay, so from now onwards, we will take a promise that we will not miss even one day's revision. Right? This is the most important aspect of the batch or of any other subject. Right? So please do remember this point. Okay, on that note, let's continue with our content. Tell me one thing. Which chapter did we complete yesterday? Which chapter did we complete yesterday? Tell me very quickly. Which chapter did we complete yesterday? Perfect answer. We completed Introduction to Ind AS. Right? So quickly before starting the new content, let's revise that topic. As I said in class only, we will revise it 3 to 4 times. So why not start the revision again? So we are starting the quick revision in 3, 2, 1 and go. First of all, the name of the topic was Introduction to Ind AS. What did we cover in this point? The main aspect of this chapter was to see to which all companies Ind AS is applicable, right? So first of all, the applicability was discussed in case of companies. Then separately it was discussed for banks, NBFC, insurance companies or mutual funds as well, right? So now we will discuss for companies. For companies, there were 3 dates. Do you remember? 15, 16, 17. 15 was voluntary basis. Then 16, 17 was mandatory basis. Under this, there were 2 phases, phase 1 and phase 2. Right? In phase 1, all listed/unlisted companies having net worth of greater than or equal to 500 crores were covered. Under phase 2, if you are listed company, that's it, that is sufficient. You will get covered under phase 2. Otherwise, if you are unlisted company, if you have a net worth of greater than or equal to 50 crores, you will get covered under phase 2. Always remember the net worth which we check should be computed as per AS. The formula will be discussed later on. The net worth which we check, we should start checking from 31st March 14. So if the 500 crore criteria is met in 14, 15 or 16, then from 1st April 16 itself, that is under phase 1, you will apply Ind AS. Why? Because if the criteria is met in any financial year, you should apply Ind AS from immediately next financial year. So before the phase 1 starts, if you meet the criteria in any of these years, you will apply it from phase 1. Otherwise, you will apply from phase 2 if the criteria is not met or if you meet it on a later date. Okay. Apart from this, Ind AS once applicable, always applicable. Okay. Also, we discussed one more point. And that point was, if Ind AS becomes applicable to any company, by default, its parent, subsidiary, associate, joint venture will also get covered. But one company will not get covered, and that was fellow subsidiary. We discussed this point with the help of an example as well. Do you remember this part yesterday? Fellow subsidiaries are not covered, but there was one more point. For the purpose of parent to prepare CFS as per Ind AS, even if this fellow subsidiary is not following Ind AS, they will have to submit the data to the parent as per Ind AS for the proper preparation of CFS, right? So this fellow subsidiary which is not getting covered, they will prepare their normal financials as per AS, but for the purpose of CFS, they will also have to submit the data as per Ind AS, right? Yes. Clear? Can we proceed further? Yes. Apart from this, if you are covered under Ind AS, your SFS and CFS both has to be prepared as per Ind AS. Also, the other point was, if your parent, subsidiary, associate, joint venture was a bank, insurance, NBFC, then you will have to apply Ind AS from the respective dates, right? You will not get covered under the point number 3. If your parent, subsidiary, associate, joint venture is a bank, insurance, NBFC, then they will check the respective dates. Apart from this, if you are listed on SME exchange, then you will have to apply Ind AS. You will not have to apply Ind AS, right? Also, if Ind AS becomes applicable, the comparatives should also be presented as per Ind AS, and the companies which are not covered above will continue to apply AS, right? This was for companies. Now let's move on towards banking and insurance company. If you are a banking company or insurance company, the implementation has been deferred, right? For NBFCs, there is no voluntary application of Ind AS. There is only mandatory application of Ind AS. And how do we check the mandatory part? It has again 2 phases, phase 1 and phase 2, right? The phase 1 starts from 1st April 18, phase 2 starts from 1st April 19. The criteria is same like companies. Now, how do we remember the dates? Do you remember I had thought 15, 16, 17, 18, 19. All these years have a gap of 1 year. 15 was for voluntary companies, 16, 17 was for companies and mandatory case. As soon as the criteria for companies is over, you will start with NBFCs. Then for 18 and 19, you will have NBFCs phase 1 and phase 2. Other parts remains the same again, but the important part is voluntary adoption is not allowed in case of banks, insurance, NBFCs. What about mutual funds, sir? In case of mutual funds, specific formats have been prescribed, right? So even mutual funds will have to apply Ind AS, and they have to start applying Ind AS from 1st April 23. I hope this is clear to everyone, right? So what about the calculation of net worth? So the basic formula was given for the calculation of net worth, where we do share capital plus reserves plus premium less accumulated losses less deferred expenditure less miscellaneous expenditure. But what will net worth not include? The following reserves have to be ignored. Which are those reserves? Revaluation reserves, write back of depreciation reserve, and amalgamation reserves. If you see any of these reserves in the balance sheet, you will have to ignore it for the purpose of calculation of net worth. I hope this is clear to everyone. Yes or no? Yes or no? Yes. Perfect. So I guess we can proceed further. So this was the discussion. This was the revision of whatever topics we had completed yesterday. Now we will start with a new topic, and that is going to be discussion of schedule 3. Sir, are we really going to discuss schedule 3 in our FR lecture? Because we know schedule 3 format, we know that it has equity, liabilities, and assets, we know the format, but we still have to discuss the format of schedule 3, because the format of schedule 3 for AS was different and for Ind AS it is different, right? So what we are going to discuss here is the format of schedule 3 for Ind AS, right? Is this clear to everyone? Can everyone just say yes or no, whether everything is clear or not? Yes, a yes or no. Dashing to the snow with a one way, over the hill we go. Okay, yeah, clear? Okay, let's proceed further. Now let's discuss the format for schedule 3. So you will have to pick up your notebooks and start writing whatever I'm writing on the board. So pick up your notebook and let's start discussing what is the discussion of schedule 3. Okay, thank you for confirming, everyone. Okay, let's proceed. Just give the heading schedule 3. Schedule 3 format for financial statements. For financial statements, right? Now, first of all, let's discuss what was the format under AS. So the format under AS was given by schedule 3 division 1. So under schedule 3 there are 2 divisions, division 1 and division 2. Division 1 gives the format for AS, division 2 will give the format for Ind AS. So now we are discussing division 1, okay, which prescribes the format for AS. Okay sir, let's proceed. Now, what used to be the format under AS? Can you tell me by which heading we used to start under AS? From which heading we used to start under AS? Perfect answer, we used to start with equity and liabilities, right? So first of all, we will write equity and liability. Okay, then we used to write equity. Under equity, we had the first category, shareholder funds, right? And under shareholder funds, we used to write share capital, which used to comprise of equity share capital and preference share capital. And then we used to write reserves and surplus. So under equity we had shareholder funds, and under shareholder funds we had two categories: share capital and reserves and surplus, right? Under share capital we had both equity share capital as well as preference share capital, right? Yes. Then we used to write down liabilities. Liabilities used to have two categories. One is non-current liability, the other one is current liability, right? The one is non-current liability, the other one is current liabilities. Sir, there used to be many headings under non-current liability as well, but currently we are not discussing that. Currently we just need to know the basic overview format of balance sheet, right? So we used to have non-current liabilities, current liabilities, done. So then we used to get the total of equity and liability. Then we used to write assets. Then again assets would have two bifurcations: non-current and current. Of course, under non-current asset there used to be PP, intangible, goodwill, long-term investments, and then in the current we used to have inventory, trade receivable, short-term investment, and etc. Right? So but this was the basic structure of your balance sheet format under AS, accounting standards. Clear to everyone? Okay, sir. Now what are we going to discuss here? We are going to discuss the format of balance sheet as per Ind AS, which is given under division 2, So division 2 gives the format for Ind AS, right? Division 2 gives the format for Ind AS. Clear? Okay. Does anyone know under Ind AS from which heading do we start? If you might have done some work in articleship, you might have come through a company which is following Ind AS. Might have. I'm not saying that you surely would have, but you might have come across a company which is following Ind AS. So does anyone have any idea regarding the format? Perfect answer, Nishita. Perfect answer, Akash. Perfect answer, everyone. Many of you might know, but in case if you're not aware, it's fine. Okay. No need to get that FOMO feeling, fear of missing out, right? It's fine. So in Ind AS, we start with the heading of assets. So of course this format is not given ideally by India. It has been adopted from IFRS, right? So IFRS used to follow this format. So because we are converging from IFRS, we have also changed the balance sheet format under Ind AS, right? So the first heading which we start with is, we start with assets. Then under assets we have two categories, current and non-current, right? Non-current asset, current asset. Then the second heading is equity and liabilities. Equity and liabilities. Second heading is equity and liabilities. Under equity, now comes the important part. Please pay full attention to this part. We will write equity. So previously what we used to do, under equity we used to write shareholder funds, and then we used to write these two headings. Now there is no category of shareholder funds. Okay, you will directly write down two things under equity. One is going to be equity share capital. Sir, previously we used to write down share capital, which used to include equity as well as preference. Now we are specifically mentioning equity share capital. So sir, what will happen to preference share capital? I will leave you with a cliffhanger at this point. The discussion of what will happen with preference share capital will be done under one chapter which is named as financial instruments, right? You might have remembered this name. Yesterday we knew that one of the bigger topics is financial instruments. So in that topic we will discuss what will happen with this preference share capital, right? So under equity, as of now, what we know is we will have only one category, equity share capital. What will happen to preference share capital, we will discuss in financial instruments. Apart from equity share capital, sir, do we have reserves and surplus? The answer is yes, but we will change the name of this. Let's say for example we have Ajay. Okay, so normally people will call him Ajay, right? But Ajay's girlfriend will call him baby Ajay, my babu Ajay, my Shonu Ajay. That means you can change the name of any particular item, right? So here also the name of that item has been changed from reserves and surplus. Now we will call it other equity. Now we will call it Ayush says Ajju. Okay, my Ajju baby. Okay, now we will call it other equity. Okay, so what is the basic difference between reserves and surplus and other equity? Why can't we use this word itself? See, let's try to understand. If the scope of reserves and surplus was this much, the scope of other equity is this much, right? That means this other equity already includes reserves and surplus, but this other equity is also much wider in scope. It is much wider in scope, right? So other equity includes, will have elements of reserves and surplus, but will also have other headings within it, right? So that is why we will use the word other equity. Okay, apart from this, what is going to be there? Then you will have liabilities. Under liabilities you will have two things: non-current liabilities and current liabilities. Is this clear to everyone? Non-current liabilities and current liabilities. Okay, sir. Absolutely clear to everyone. So this is the basic structure of the balance sheet. Of course, there will be many elements within this. So what elements will fall under non-current, what will fall under current, that discussion will be done under respective Ind AS. That clarity will get better when you study all the Ind ASs, right? So there is no point discussing with what will fall under non-current because you don't have any idea of that Ind AS. So that idea you will get once we study the respective Ind ASs. Is this clear to everyone? Okay, sir. So this was the format of balance sheet. If you have not written it down, giving you 10 seconds, please write it down. Okay, giving you 20 seconds. Okay, write it down. Shall I count from 20? Okay, 20, 19, 15, 7, 3, 2, okay, 0. So what kind of counting was this? This is AK style counting. Okay. Okay. Now we will move on towards the format of, okay, let's see the format of balance sheet from your textbook as well. This is on page number 1.4. Okay, so the part 1 is balance sheet. So you can see it is starting with assets. See, you do not require to remember the format of AS, right? You just need to remember the format as per Ind AS, right? So it has two categories: non-current assets and current assets, right? Under non-current there will be many elements, if you can see, but this discussion will be done under respective Ind AS, right? Again, this discussion, why inventory will fall under current, what about financial assets, these all categories will be discussed under respective Ind ASs. So see, we can spend time discussing which Ind AS will cover this, which Ind AS will cover this, but that won't make any sense because you don't have the knowledge of name and number as of now, right? So we will discuss under respective Ind AS. No need to worry about it. You just need to take away the basic format of the balance sheet, right? Okay. Apart from this, you have equity and liabilities. Under equity you have capital, equity, capital and other equity. Under liabilities you will have non-current liabilities and current liabilities. I hope this is absolutely clear to everyone. Now one thing we always know, that for each element of balance sheet we always prepare a notes to accounts, right? So let's say for example we have multiple PPEs, property plant equipments, so we will write the final figure here, but the working of this will be done under notes to accounts, right? So likewise for each and every element we will we will give the working under notes to accounts, but there is one element for which a notes to accounts will not be sufficient, and that is equity. Under equity we have equity share capital and other equity. As I already mentioned that the scope of other equity is so much wide that only a single notes to accounts would be sufficient. That is why for these two elements, or you can say for this equity element, we do not prepare any notes to accounts, but we will have to prepare a statement which is known as statement of changes in equity, which is known as statement of changes in equity, SOCE, as you can say it. Short form is SOCE, statement of changes in equity. Sir, why do we require a statement? Because the scope of these two elements is much more wider. So a single notes to accounts won't be sufficient. Is this clear to everyone, guys? Perfect. Now, sir, do show us the statement. So see, this is how the statement looks like. Statement of changes in equity, right? So first you have equity share capital. Under equity share capital you will have 3 columns. Sir, how do you remember these columns? Ideally it is nothing but a reconciliation kind of a statement where you have the beginning balance, then you have the balance which was there during the year, and then you have the balance at the end of the year. So it is nothing but opening, add during the year if you issue anything, if you issue any new category shares, you will add. Also, if you have bought back any shares, so buyback of shares will be reduced, and then you will get the closing balance. So this plus during the year issue or less the buyback will give you the closing balance. So this is nothing but the format for equity share capital. I hope this is clear to everyone, guys. Apart from this, as I do you remember me saying that the scope of other equity is much more wider compared to reserves and surplus. See, I had also written this point, right? If reserves and surplus this much, other equity has so many points. So are you ready for the unveiling, for the revealing of other equity statement? Guys, are you ready, guys? Okay, see this. Sir, how do we remember this statement? Because it has so many elements, and also you can see this is a statement of other equity. It already has reserves and surplus, but apart from reserves and surplus, there are so many other elements. So sir, how do we remember these all elements? Now, do we need to ratify this? Also sir, there are so many columns here itself. See, these columns are nothing but again a reconciliation, where you have the opening balance, then you will have the changes during the year, changes, and then you will get the closing balance. So this is very simple: opening, during the year, closing. But what about all these columns, sir? Do we need to remember all these columns? As of now, the answer is no. As of now, the answer is no. Sir, so what do we need to do, and when will we study these respective columns? As I had already mentioned, you will study about respective items in the respective Ind AS, right? So as of now, you will just write whatever I am saying to you. Just put an arrow and write it down. At this point, you need not learn this. Each element of other equity will be discussed in respective Ind AS. Each element of other equity will be discussed in respective Ind AS. Each element of other equity will be discussed in respective Ind AS. Is everyone able to understand this point? The answer is yes. Okay, perfect. Let's proceed. So what did we discuss now? We discussed a statement of changes in equity. We just got an overview of the point, right? So we can write it down in this balance sheet format as well, that for these two elements we will prepare SOC. We will prepare SOCE. Clear? Okay, absolutely clear, sir. So now we will move on towards the other aspect of this financial statements, and that is, we discussed about balance sheet. So ideally, now what should we discuss? We should discuss about profit and loss. Absolutely correct. So let's start discussing about the profit and loss statement. So now see, ideally what we said, that you need not remember things as per AS. So we will discuss only the things as per Ind AS. Okay. As per Ind AS, we are discussing the format for statement of profit and loss. Clear? Yes. Perfect answer, Srinivas. Yes. Statement of profit and loss. Okay. So how do we start this statement in profit and loss? How do we start it? Tell me. See, you need to answer, right? Okay, perfect answer. We will start with, first we will write down revenue. Revenue side or income side. We have two elements here. One is revenue from operations. One is revenue from operations, and the other one is other income. The next one is other income, right? Yes, sir. Okay. So you complete this format, then I will tell you one small story. What happened to me? Yesterday I got hit by my wife. Why? It is very normal for me. Gharelu hinsa we say in Hindi. Gharelu hinsa. What you can say? child abuse. Okay. Okay, I will tell the story once we complete this format. Okay. So under revenue we have two categories: revenue for operations and other income. Okay. Okay, sir. Then if we total this out, we will get total income. Okay, sir. Then the second category is expenses. The second category is expenses, right? Okay. Under expenses, what all elements do we have? From which element do we start? So in case you might know, in case you might not know, it's fine. We start with purchases of stock in trade. So what is the meaning of this? By chance, if you are involved in a trading business, then you will buy elements and you will sell those elements as it is. If you are in a trading business, let's say for example, I am in the trading of calculators. So I will buy calculators and then I will sell calculators as it is, right? I'm not into manufacturing business. I'm into trading business. I buy the product and I sell that product as it is. So this calculator will be my stock in trade, right? So first element is purchases of stock in trade. Okay. What about the next element? The other element is raw material consumed. So now what is the meaning of raw material consumed? Relevant for those businesses which are involved in manufacturing. Why, sir? Because for a manufacturing business, company will not procure the product directly. They will procure raw materials. They will prepare finished goods out of it and then they will sell the finished goods. So in those kind of companies, raw material consumed is an important aspect. Now why this word consumed? Because here we will not consider the purchase of raw materials. We will consider the consumption of raw materials. Sir, how do we find out the consumption? It is nothing but opening raw materials, add purchases of raw materials, less the closing balance of raw materials. Opening plus purchases less closing raw materials, right? Okay. Next point is changes in inventory. It means your opening inventory or opening stock less closing stock, less closing inventory. Sir, why this element appears in profit and loss statement? See, ideally you are in CA final, so you might be knowing all these things, but still I assume that you need not know even a single word of financial reporting. That is why I'm explaining each and everything in detail. So why this thing appears in the expense side? Let me show you an example. Do you remember we used to prepare trading account? So we used to write down opening stock here and we used to write down closing stock in the income side. So under the schedule 3 format, what we do is we do not write the closing stock under the income head. What we do is we show the net balance under expense side. So that is why we do opening less closing. Clear? Okay, sir. Absolutely clear. Let's proceed. Hallelujah. Okay, there is a Hindi movie Kabhi Kushi Kabhi Gum. In this song is there. Hallelujah. Okay. Next point is depreciation and amortization, right? Then the other element which might appear is employee benefit expenses. Then the other element which might appear is finance cost. Then whatever is left over, other expenses, of course. By totaling all these expenses up, you will get total expenses. This is your B part. So you got your total income. We computed our total expense. The netted off figure of this will be profitability, right? So ideally we will get profit. But as if you remember the format in AS, we used to have profit before exceptional items, extraordinary items and taxes, right? But under Ind AS there is no such heading of extraordinary items. So this profit which we get will be before profit before exceptional items and taxes. So then you will reduce exceptional items. Then you will get profit before tax. Then you will reduce tax expense. then you will get profit after tax, of course. Are we able to understand this point? Right? Yes. Now, sir, what are exceptional items? This will be discussed under Ind AS 1. We will discuss the same under Ind AS 1. Don't worry about it. Okay. But you can consider exceptional items as those items which do not occur in normal course of business. Let's say, for example, loss by fire. Exceptional item. Right. So you can consider that. Okay. Court case expenses, everything. You lost a legal court case maybe. So the amount which you pay under that will be an exceptional item for you. Okay, sir, got this point. So this is our format of profit and loss. Sir, this format was the same as per AS also. So the format of profit and loss is same under AS and Ind AS. Till now, the answer is yes. Till now, it is same. Apart from the word that under AS, there used to be extraordinary items also. Right? So till now, it is yes. But. The picture is not yet over. As we say in Hindi, picture abhi baki hai mere dost. And this means picture is not yet over. So now we will discuss an extra point, an extra item, an extra, you can say, category which appears in the statement of profit and loss under Ind AS. Right? So are you ready, guys, for the discussion? Are you ready? Okay. So let's start the discussion now. Leave some space. Leave approximately, you can say, 5 to 10 lines now, and then give the heading example. Write it down as concept builder. Okay, so this example is just to build your concept. Okay. So let's consider, let's say we have Naveen here. Okay, so we have Naveen. So Naveen is very wealthy. He is very rich, and he is even richer than Ambani or Mukku. Mukku means Mukesh Ambani. He is even richer than Mukku. Okay, so let's consider Naveen, who has a land. Okay, who bought a land in the year 1995. Just assume he bought a land in the year 1995. He might not have been born also in that year, but still he is so rich that he can buy land. Okay, he is even richer than Mukesh Ambani, as I mentioned. See, the only poor person here is me. Why? See, BB Virtuals only gives me fixed income 20,000 per month. So total comes to 2,40,000 per year. I am not even falling under the basic exemption category, guys. So guys, support Aakash Kandoi. Okay. Cool. So, our Naveen. Where is Naveen? Let me draw his photo. Naveen. See, as I mentioned, the only poor person here is me. Okay. This is not a joke, guys. I'm serious. I just get 20,000 per month. If possible, do request BB sir to give me, to double up my pay. Not double up, make it 10 times. Okay, thank you. Cool. Okay, let's proceed. So Naveen is very rich. Naveen has a land. Naveen bought a land. Okay. For how much? For 10 lakhs. What will be the journal entry for this? MacBook, iPad, iPhone and car. I neither have any car. Don't have MacBook. I don't have even iPhone. I just have cover of iPhone. Let me show it to you. I just keep the cover of iPhone with me. I don't have any iPhone. See, I just have cover. The phone which I have is OnePlus. The phone is of OnePlus, but the cover is of iPhone. See, poor people, hungry people. Okay, we trust you. Okay, thank you so much for trusting me. Okay, with 20,000 you are going world tours. When did I go world tour? That is my duplicate Chachera bhai. That is my duplicate, you can say, brother-in-law who is going. I am not going anywhere. I am staying here only, teaching you guys and try to build some funds for myself, for my survival. Yeah. Okay, thank you for the answer. If Naveen might have bought a land, the what would have been the journal entry? It would have been land account debit to cash bank account. 10 lakhs, 10 lakhs, right? 10 lakhs, 10 lakhs. Perfect answer, right? Now let's assume at that point of time we were following AS. And do you remember the accounting standard which used to exist in that year? It used to say that you should carry your asset at cost only. Our accounting standards were very conservative. right? They were like a traditional parents. You should not do a love marriage. You should only do arranged marriage within the family. You should get married by the age of 21. The AS at that time was like a traditional parents. No love marriage, no roaming with girlfriend, no roaming with boyfriends, only staying at home, cooking, ye, wo, okay. So the AS used to say you will keep everything at cost itself. Okay. Now let's assume our Mr. Naveen was holding this land from 1995 to which year? So Naveen held this land from 1995 till you can say 2028. He held it till the year 2028. Okay. So just tell me one thing. If Naveen is following AS and AS says that you will keep the land at cost, and land is a non-depreciable asset, right? So what will be the value in your books? Value of land in books of accounts. Let me introduce one term. At whatever value the land is shown, that value is known as carrying amount. At whatever value any asset is shown in the balance sheet, that amount is known as carrying amount. Okay, I will call this amount as carrying amount. So at what value will this land be shown in the books of Naveen Limited? Of course, because AS says cost, you will have to keep it at cost. So you will show at what value? 10 lakhs only. So it is shown at 10 lakhs. Now, what did Naveen do in this year? He got a good opportunity. Also, he needed some funds. So he decided to sell the land. Oh my god, selling the land. Okay. So Mr. Naveen sold for 5 crores. So of course the value of land during these 23 years must have appreciated drastically. So it appreciated to an extent where he could have sold this land for 5 CR. Right. In which year? In the year 2028. In the year 2028. Okay. Tell me what will be the journal entry for sale. What will be the journal entry for sale in the year 2028? I want you guys to pass one journal entry for sale. What entry will Naveen pass for the sale of this land? Time starts now. Nishita, Naveen, okay. Rishi, very good. Okay, Srinivas, very good. Okay, Jessica, okay. Ashish, okay. L10, okay. Saurav, okay. Okay, Kamlesh, okay, good. Perfect. Now see, if you are saying that the entry should be bank account debit to land, that's it, then your answer is wrong. Why? Let me tell you. At what value will we debit the bank account? Of course, you are receiving the funds, so you will debit the bank account at 5 CR. Right? Now, because the land is going out, you are selling the land, so you will say to land account. But at what value will we credit the land account? So just remember, just take a promise today. Whenever anything is going out of our books of accounts, whenever anything is going out of our books of accounts, we will credit the same. We will remove it out at carrying amount. We will remove it. We will de-recognize it. We will remove it at carrying amount. So the land will go out at what value? At carrying amount. And that is 10 lakhs. Okay. What about the balancing figure? Your balance will be profit on sale of land. Do you remember the basic accounting rules? Debit the receiver, credit the giver, debit what comes in, credit what goes out, debit all expenses and losses, credit all incomes and gains, right? Okay. So we are having a profitability of 4.9 CR. Okay, sir. We got this journal entry. Now tell me one thing. What is the issue with this accounting? What is the issue with this accounting? There is one basic issue with this accounting, I'll tell you. Let's assume Naveen has a total turnover of only 2 to 3 CR. His annual turnover is around 2 to 3 CRs. Now suddenly in the year 2028, he will have a profitability of 4.9 crores. The profitability will exceed his turnover. And if you see closely, suddenly his year 2028 has so much of profitability not because of his core business. This profit has arisen because of a sale of asset, sale of land, sale of property equipment. Because of a sale of land, this profitability has arisen. So do you see this shows a very, this shows not a true picture of the financial of the company, because if you see this you will feel that the profitability of the company is very high, but in substance it is not, because this profit is because of sale of land and not from business. But the shareholder, if it sees on the face of it, it will see that Naveen has performed very well in 2028, but that might not be the ideal case. So just answer me one thing. I will give you two options. Choose any one, okay? Do you feel this profit is only of the year 2028, or this profit is ideally from 1995 to 2028? That means ideally this profit has arisen over a period of 23 years, sorry, 33 years. Do you feel this profit has arisen over a period of 33 years, or it only belongs to the year 2028? What do you feel? Perfect answer, everyone. This profit has arisen over a period of 33 years. But because the AS was so conservative that it allowed only cost model, we could not book any profit during these 33 years. So we suddenly had to book a sudden profit of 4.9 CR, which did not show the correct picture of the company. So now what remedy is available with the company? What is the solution to this problem? So here comes the Superman. Here comes Thanos. Here comes Captain America. Captain America. Not America. It's America. Okay. So here comes Ind AS. And now Ind AS says that I will rectify this problem of yours which was given in AS. So let's take the example and let's extend it to case 2. So now what Ind AS does is, Ind AS gives you two options. You can either keep the asset at cost, or you can keep the land at fair value also. See, ideally these two options as of now are available in AS also. In AS also they have you can say amended these provisions, right? But previously it was not the case. Anyways, so in Ind AS now you have two options. You can either keep at cost, or if you feel fair value will be suitable, you can keep the land at fair value. Now how does this work? Let me tell you. Let's take the same example that in the year 1995, Mr. Naveen, Mr. Rich people, Mr. Richie Rich purchased land worth 10 lakhs, right? So what will be the journal entry? What will be the journal entry? Land account debit to cash bank, 10 lakhs, 10 lakhs. Okay, sir, that is simple. Let's move on towards the next year. Let's say in the year 1996. Of course, our cost is 10 lakhs only, but the fair value of land has increased. So now we already know that instead of booking the profit directly in the year of sale, if we keep on booking the profit based on the changes in fair value, based on the rise in fair value, such situation will not arise, right? So in the year 1996, we came to know that the fair value of the land is 17 lakhs. And as per Ind AS, we have chosen to value everything at fair value. So we chose this. We chose to keep it at fair value, right? Okay, sir. So the cost at 10 lakhs, fair value is 17 lakhs. Now, we decided as per Ind AS to value at fair value. To value at fair value. Now tell me what will be the entry for this. We have to increase the value of land. We have to increase the value of land from 10 lakhs to 17 lakhs. What entry should we pass as per you? What entry should we pass as per you? We will have to increase the value of land, right? Perfect answer. So we will debit land. So we will say land account debit. Correct. 7 lakhs. 2. What will we do now? See, why debit? Because land is an asset. To increase an asset, you have to debit it. To increase an asset, you have to debit it. So we will say land account debit. 2. which term we will use. Now see, this is not profit on sale. You have not sold the land, so you cannot say profit on sale. So ideally, because you have revalued the figure of land, you have taken it to fair value. From cost, you have revalued it to the latest fair value. So you will say this is nothing but a revaluation gain. You will use the term revaluation gain, 7 lakhs. You will use the term revaluation gain, 7 lakhs. Right? Can I say that this is very much like an unrealized gain? This is very much like a unrealized gain, if you can see. Okay. Now this is a gain. So where we will show this in our profit and loss? So ideally you say that this is a gain. So ideally it should be shown under profit and loss, right? But again one issue arises. See, Ind AS is progressive. Ind AS is like your existing generation parents, but it is not so progressive to allow you anything. Let's say for example, traditional parents were like that you have to do arranged marriage only. Now Ind AS is like a modern parents. You can either do love marriage or you can do either arranged marriage, but Ind AS is not so progressive that it is allowing you to stay with your girlfriend before marriage. So Ind AS is not so progressive to allow you to book any gain in profit and loss, right? So now what remedy is available with the company for this issue? See, this is an issue. Why? Let's say for example, your normal profit from the business is let's say 10 lakhs. And from this revaluation gain, you earn another 7 lakhs. So ideally your profitability is seen as 17 lakhs. But if the shareholders see 17 lakhs, they will not get a true picture of the company. Why? Because out of this 7 lakhs is unrealized. And also it is not from your core business. So what do we do? So to solve this issue, please remember, please listen carefully now. To solve this issue, what Ind AS did was, under the statement of profit and loss, it made 2 separate categories. Under the statement of profit and loss, it made 2 separate categories. One category is profit and loss itself, and it introduced another category named as OCI. Now sir, what is the full form of OCI? OCI means other comprehensive income. OCI, other comprehensive income, right? So it introduced a separate head within the statement of profit and loss, naming it OCI. That means how does your profit and loss under Ind AS look like? So the first category is profit and loss, where you have all the revenue and where you have all the expenses, right? You find out the profit after tax, and within this statement only you will have a second category named as OCI. Right? Now what is the purpose of this OCI? As if you are able to understand it very clearly, to record such unrealized gains and losses, this separate category was prepared. Likewise, you can say that instead of booking the gain in profit and loss, now we will book in OCI. So what happens if we book the profit in OCI? Now see, let's suppose you are a shareholder, right? So let's say if you see the company's profit, the profit reported under P&L head is 10 lakhs and under OCI head is 7 lakhs. So you will get a clear picture now that this profit is not to be considered while checking the profitability of company. Only this profit you should consider, which was reported in the category of profit and loss, right? So by bifurcating this into 2 parts, you gave a clear picture to the shareholder, to the users of the financial statements, that this profit is unrealized. So you need not consider this while checking the long-term profitability of the company, by checking the long-term potential of the company, right? So sir, does this mean that all unrealized items will come in OCI? Sir, does this mean that all unrealized items will come in OCI? The answer is no. Sir, Paltu, you just flipped. You only said that unrealized items will come in OCI, but now you are saying that all such items will not come in OCI. What does this mean? Let me elaborate this for you. See, not all, but few unrealized items will come in OCI. Now, which will be those few items? it will be defined by Ind AS. So for any item to appear in OCI, first, it will always be unrealized, and second, it has to be defined by Ind AS that it will come in OCI. So let me write it down for you. Don't want to dress up the flow, but you are one of the best teachers of FR. Got complete control of FR to your classes. Thank you so much, Sachet. Thank you. Okay, so let's write it down. We will say few items will be recorded. Few items will be recorded in OCI. Which are those few items? These will be defined by Ind AS in respective topics. When we study the respective topics, we will come to know which all items will come in Ind AS. Right? Also write down one important note, and that is OCI is prepared to record few unrealized gains and losses. But not all unrealized items appear in OCI. This is a very important point which you need to remember. Just because any item is an unrealized gain or loss, that doesn't mean it will appear automatically in OCI. Unrealized items form part of OCI, but only when they are defined by the respective Ind AS. Of course, when we will study the respective topics, we will come to know about this. Is this clear to everyone? So please write this down, giving you 20 seconds again. Don't worry, I will count till 20. 20, 18, 14, 1, 0. Oh, done. Done? Okay, sir. Now, I hope this is clear to everyone. So this means, but land is covered under Ind AS 16. Okay, we will study this in the next topic. Of course, after schedule 3, we will study Ind AS 16 only. So under 16, it is clearly mentioned that in case of land, the unrealized gain will be transferred to OCI. That respective topic clearly says that it will be transferred to OCI. So in our case, this 7 lakhs will be transferred to OCI. This 7 lakhs will be transferred to OCI. Is this clear to everyone? Okay. So your value of land was 10 lakhs. You revalued by 7 lakhs. So what is the revised carrying amount of land in 1996? Land carrying amount will be now 17 lakhs. Sir, why 17 lakhs? It was 10 lakhs. You revalued by 7 lakhs. Now it will be. Yes, Nishita, it is. Nishita is asking that, sir, fair valuation is done in actual. The answer, of course, is yes. Actually, the issue with the students is in their internship, they don't get much exposure to this financial reporting part. Of course, you get exposure for auditing, you get exposure for taxation, but rarely any student gets much exposure into financial reporting. That is why it becomes a little bit difficult for the student to accept whether these things are happening in real. But of course it is. Don't worry, during the course of the batch, I will also show you many annual reports of the companies where we will see this, that the company is doing it in real. Don't worry, I will also give you some practical insights over this, but during the respective topics. Don't worry. Okay. I hope this is clear to everyone, guys. Okay, let's proceed. Now let's take this example further to next year. Now you will try to answer it. Okay, let's say we are going in the year 1997. Okay, let's say we moved forward towards 1997. Now our fair value is 20 lakhs. I want every one of you to try to pass a journal entry now. Every one of you will pass a journal entry. Sir, this is CA Moin Maniar here. Your revision helpful. I clear by watching your lectures. Thank you, Moin. Thank you. Okay. What will be the entry? I want the entry. So now your carrying amount was 17. Now it went on towards 20. Okay. Perfect answer, Rishi. Perfect, Nishita. Perfect, everyone. Okay. So the entry will be land account debit to again revaluation gain. We have not sold the land. So again, this will be shown under the head of OCI. The amount will be 3 lakhs, 3 lakhs. And what will be the carrying amount of land? Land's carrying amount will now be 20 lakhs. Perfect. Now let's suppose in the year 1998, we have sold the land. So let's say now what will happen is sale of land. Okay. We sold the land for 22 lakhs in the next year. We sold the land for how much? 22 lakhs in the next year. Now tell me the entry. We have sold it now, okay, for 22 lakhs. So now what will be the entry? So you will say cash bank account debit 22 lakhs. 22 lakhs to land account. So whenever the land is going out, it will be done at perfect answer carrying amount. So we will say land at carrying amount. What is the carrying amount of land? It was 20 lakhs. To profit on sale 2 lakhs. Now my important question to you is, where will this profitability go? Will this profit be reflected in profit and loss, or will this profit be reflected in OCI? What will happen to this profit? So do remember, don't transfer this profit to OCI. See, this is now a realized profit. This is the realized profit, right? You have in reality earned it. So perfect answer will be transferred to profit and loss. It will be transferred to profit and loss. Clear? Okay, sir. So this is how the accounting works. But there might be one question which might arise in your mind, and that is, sir, what will happen with the old unrealized profit? Because previously it was unrealized, but on sale of land, it has now been realized, na sir? So what will happen with the previous 7 lakhs, with the previous 3 lakhs, which we booked in OCI as unrealized profit or revaluation gain? What will happen with this? So this discussion will be done in the respective Ind AS, that is Ind AS 16, which discuss about the treatment of revaluation gain in case of land, right? So what we will do is we will write a note, because this doubt will definitely arise in your mind. Note: what will happen with revaluation gain of 7 lakhs plus 3 lakhs booked in OCI in previous years. So just write that discussion will be done in Ind AS 16. PPE. PPE means property, plant, equipment. We will discuss in the respective Ind AS. Okay. Is this absolutely clear to everyone, guys? Okay. I want to discuss a few more aspects with you, and then I guess we can take a small break. But before that, I want to discuss few more aspects. Are you ready, guys? Guys, are you ready? See, ideally what I am going to discuss now, you already know that facts, right? But still still I would like to highlight those facts for you. Okay, if you see this format, this Ind AS statement of profit and loss format, just would like to mention that, let's say for example, your profit after tax, let's say example, you can assume that it is, let's say 5 lakhs, assume, okay, just assume it. And let's say under OCI you are booking a revaluation gain. Under OCI you are booking a revaluation gain of, let's say, 7 lakhs. So this PNL ka profit and this OCI's revaluation gain in total becomes TCI. That is known as total comprehensive income. In short, we will call it TCI. What is TCI? It is nothing but a combination of profit and loss and OCI. So see, now the format has been drafted in such a smart way that the shareholder can see all the impacts now within one column itself. He can see the profit from the core business, he can see the unrealized profits, he can see the total profitability of the company, right? So PNL ka profit plus OCI's profit will give you TCI, total comprehensive income. Sir, from where did these figures arise? These are assumed figures, okay, random figures. Is this clear to everyone, guys? Absolutely clear? Okay, cool. Let's proceed further. Okay. Now let's say for example. Done with that example? Okay. Now let's proceed. Let's say you have a statement of profit and loss, right? So ideally our profit and loss comprises of two things. One is profit and loss and one is OCI. Total of both the elements is TCI. We already know this, total comprehensive income. Do you know that profit and loss is prepared for the year and balance sheet is prepared as on date? So what is the difference between these terms, for the year and as on date? See, ideally you study these things in your 11th standard in your college, right? But assuming that you don't know these, I have to explain this. Okay, so let's say, what does this mean? Let's take one example. Okay, let's say we are standing in the year 1996. Okay, we have two aspects, one is PNL, one is OCI. So let's say under PNL you have a revenue of 100 crores, then you incur some expenses of 70 crores. So you have a net income in profit and loss of 30 crores, right? Now let's link this with the example which we just took above. Tell me, in the year 1996, how much profit did we have in OCI? How much profit did we book in OCI? Let's see. So in the year 1996, here is the year 1996, we booked a profit of 7 lakhs in OCI. So basically I'm linking this with the above example. Sir, from where did this 170 come from? Arey Baba, this is assumed figures. Huh? These are assumed figures. Assume. Okay. Only for OCI I'm linking with the above example. So we have a revaluation gain of 7 CR. From where did this come? Refer above example, right? So the total of this will be TCI. PNL plus OCI will give you TCI 37 CR. Now, okay, it was lakhs or crores? Sorry. Let's make it lakhs. Let's make it lakhs. Sorry. Lakhs. 7 lakhs, 37 lakhs. Whenever there is any change in the figures, please let me know. Okay, don't worry. Okay, 7 lakhs. Okay, now what happens with this profit? I guess you might be knowing that whatever profit the company earns, it gets accumulated in your reserves, right? So now you will have a balance sheet. balance sheet is prepared as on date. So ideally in AS it used to get accumulated in reserves and surplus. Now we don't have reserves and surplus, we have other equity. So the profit will get accumulated in other equity. Now, can we accumulate the total 37 lakhs in a single head? Should we accumulate total 37 lakhs in a single head of reserves, or we should bifurcate it? Should we allocate 30 lakhs in a particular head and 7 lakhs in a different head? Reason being, this 30 lakhs is your core profit. It can be used for distribution of dividends and other aspects, right? So ideally what we do is, for this 30 lakhs, we will accumulate it in retained earnings. We will accumulate in retained earnings, 30 lakhs. And what about this 7 lakhs? For this 7 lakhs, because we know that this profit is not available for withdrawal, this is an unrealized profit. So in other equity also, while we accumulate this, we will create a separate head for this. And that separate head will be known as revaluation reserve or revaluation surplus. You can call it by either of the names. 7 lakhs. Total becomes of course 37 lakhs. If you can see, it is drafted in such a smart manner that even a layman shareholder will understand that this is our core profit, right? And this is our unrealized profit, right? So likewise, the bifurcation was given in profit and loss. It is also given in other equities as well, right? Now I'll tell you one thing. If you see the format of statement of changes in equity, do you remember we had such a big statement of other equity? And I already said that you will learn about these points, these elements, different elements in respective Ind AS. If you can see, in other equity, we will have reserves and surplus, and we have retained earnings in that. We also have revaluation surplus. Now you know that why this was created, what was the purpose of this, why this is under a separate head. Because under OCI it was a unrealized profit and this is not available for withdrawal. So on the other equity also you will accumulate it in a separate head. Can you feel that when we take one example, when we study that particular item in detail, we are also able to relate with the logic of it? That is why I had told you that don't focus on ratifying the items here. Once you study everything conceptually, you will automatically be able to recall things. You will automatically be able to relate to things. And then you need not able to put that extra you need not put that extra effort to remember things separately. You will automatically be able to relate to things. Is this clear? Yes. Maza aa gaya from Chennai. Okay, thank you. Cool, great, works. Maza aa gaya means felt very nice. Okay. Maza aa gaya is a Hindi word. Maza aa gaya means felt very nice. Okay. Anyways. See, by the end of this batch, I will also teach you some Hindi terms. Don't worry about it. Okay. See, you should teach me some Tamil or Telugu terms or some South Indian terms. I will teach you Hindi. Okay. Deal or no deal? Deal? Okay. Deal done. Pinky promise. Okay. Cool. So, clear? Okay, sir. Now, also, I want to make you understand about this aspect now, as on date wal aspect. Come. We will come towards the next year, 1997. Okay. Let's say again we are discussing statement of profit and loss. Okay. For the year. Statement of profit and loss for the year. Solely Thar Lam Sir. What is the meaning of this? What is the meaning of solely Thar Lam? What is the meaning of it? Please tell the meaning also. it might turn out to be a wrong word. I don't know. Acha, if it is a wrong word, forgive me. I'm not aware of this. Okay. And if it is right word, thank you. Okay. So let's say we come in the year 1997. We have a profit and loss statement. Okay. We have certain revenues. We are assuming the figures. Okay. We have a revenue of let's say 80 lakhs. We have let's say we will teach you as well. Thank you. We will have expense of 60 lakhs. Sir, where did this arise from? We are assuming these figures. So in that case, you have a net profit, net income in profit and loss of 20 lakhs. Okay. Then we have OCI category. I can teach Tamil. Okay. Okay. So under OCI, please check your above example. How much profit was booked in OCI in the year 1997? How much profit was booked in OCI in the year 1997? Please confirm. Okay. Thank you for confirming. We had a reevaluation gain. So if we see the above example, we had a profitability of 3 lakhs. Okay. 3 lakhs. Total of this becomes, of course, TCI 23 lakhs. Okay. So we recorded only the current year income in profit and loss on OCI. Now let's move on towards balance sheet as on date. Let's move on towards balance sheet as on date. Okay. In balance sheet, we will have other equity. Now let me check how much do you interpret this term as on date. Whether you are able to understand what is the meaning of as on date. So to check this, what I would like to know from you is, you all will give me the balance of retained earnings. You all will give me the balance of retained earnings. What will be the balance of retained earnings as on today, as on 1997? Okay, so I'm getting two answers. One is, the one answer which I'm getting is 50 lakhs, and the one answer which I'm getting is 20 lakhs. So now, what is the meaning of as on date? As on date means in balance sheet the figures will be cumulative. So what will you do is, you will check the opening balance. So let's assume previous year was your first year of business. Okay, so previous year you had a balance of 30 lakhs in retained earnings, right? So first you will add the opening 30 lakhs. Then you will add current year balance. Add during the year 20 lakhs. Total is how much? 50 lakhs. That means, what is the interpretation of this word as on date? As on date means the figures will be shown as cumulative till date figures. But what is the meaning of for the year? Only the profitability on during the year will be shown here, right? So likewise, even for revaluation surplus, you will say opening, it was 7 lakhs. Add during the year 3 lakhs. Total is 10 lakhs. Very good, Supraja. Very good. Very good, Nishita Srinivas. Very good. Clear with this point? Yes. Okay. Also, one more thing which I already mentioned. What will happen to this surplus in future? Will this always remain in this separate category? Well, of course, answer is no. When you sell the land, it will be transferred to some other category, right? But where will it get transferred and when it will get transferred? That will be discussed in respective Ind AS, that is Ind AS 16, right? We already wrote this, right? What will happen with the revaluation surplus? It will be discussed in Ind AS 16. Let's write it down here as well. This is only point which I wanted to highlight, okay? So you understood now what is the meaning of as on date and for the year. Only to explain this point, I took the examples for the 2 years, 1996 and 1997. Okay, so we will also write down what will happen to revaluation surplus in future when you sell the land. When land is sold. So we will say, thank you so much, Vyomeshkar. We will say, we will discuss in Ind AS 16. We will discuss in Ind AS 16. Clear? Absolutely clear, sir. Absolutely clear. Only one last thing which I want to show is, I hope this is done. Okay, chalo. The only thing which I want to show is, see, here is a statement of profit and loss. The revenue from operations, other income, total income. Then you will get the expenses, right? Total expenses you will get. Then you will get profit before exceptional items and taxes. You will deduct the exceptional items, profit before tax, less the tax expense, you will get profit after tax. Of course, you will show profitability from continuing operations separately and from discontinuing separately. This is discussed in respective Ind AS. We will cover later on. Then if you can see, you will see a separate head of OCI, right? Within the statement of profit and loss only, there is a separate category OCI. And the total of this will become TCI, total comprehensive income. It comprises of profit and loss ka profit and OCI's profit. The total is TCI. Clear? Okay. The last point which I want to show is, which items will appear under OCI? The list is given below, but you need not remember the list. This will be discussed in respective Ind AS. The list is given below, okay? Which items will appear in OCI, but this will be discussed in respective Ind AS. Okay. One last thing which I want to show is, under OCI, if you see, there are two categories, A and B. Just read the heading. Items that will not be reclassified to profit and loss, and then the income tax of the above items. Then the B part is items that will be reclassified. Items that will be reclassified to profit and loss, and the income tax of these items. Now, sir, what is the meaning of this? So, ideally, even OCI has two columns. Even OCI has two columns. One, the column which we call as not be reclassified. In short form, we can call it as NR. And the other column will be, which says it will be reclassified, which will be known as R. So, what is this not be reclassified and what is this will be reclassified? So, as of now, we do not know this. We will study this also in Ind AS 16, right? So, what I'm doing is, see, everything I can't teach you here itself, because as of now, we don't have the knowledge of many items. We just need to know that there is a category of OCI. We just need to know that there are two columns within OCI. And what are those two columns? We will study in respective Ind AS. So, what we can do is, come in our format where we had written, where we had given the format of profit and loss, right? So, under profit and loss, we mentioned PNL and OCI, right? So, whatever I'm writing, just copy it down. Okay, just copy it down. This will help you for future reference purpose. Okay. So, just write, just put two arrows against OCI. One will be OCI NR. You can write the full form also. Not be reclassified. And one is OCI R. R means reclassified. Reclassified where and what, we don't know. So just write what is R and NR. We will discuss in detail about OCI, R and NR in Ind AS 16. These notes are helpful to revise it. When we forget the main concept. Of course, that is why I'm making you write everything in the notes. Don't worry about it. Okay. I guess this is clear to everyone, guys. Absolutely clear. Perfect. So, ideally, we have completed our schedule 3. See, we cannot say that we know each and every element of schedule 3. But yes, what we can say is we know the basic idea of schedule 3, and that is what is required, because once you study all the Ind ASs, schedule 3 will keep on coming. So we can do that discussion of detailed schedule 3 in the respective Ind AS also. Like for example, we will prepare the balance sheet in a chapter known as consolidated financial statements. There also we will learn how to prepare the balance sheet, how to prepare the profit and loss. Don't worry about it. Okay. But as of now, this much knowledge is important. Clear? Is this clear to everyone? Perfect. Got it. So before we move on towards our break, let's revise whatever we have studied in this first session. Okay. So we are starting the revision in 3, 2, 1 and go. First of all, we started with the discussion of Schedule 3 Division 2. The format of balance sheet and profit and loss is given for Ind AS under Division 2. In balance sheet, we will start with which element? We will start with assets. Assets has 2 elements, non-current, current. And then we have equity and liabilities. Under equity, we have 2 elements, equity capital, other equity. Of course, for these 2 elements, a single note is not sufficient, so we will prepare a statement of changes in equity. Then we have liabilities, non-current liabilities and current liabilities. Apart from this, then we move on towards our profit and loss. Also, the statement of changes in equity need not be remembered, but of course there are many heads under this. Okay, so just remember that part. Okay, then we move on towards profit and loss. Profit and loss has 2 elements. One is P&L, one is OCI, right? So if anyone asks you that will all the unrealized items be shown in OCI, the answer is no. Only few unrealized items will be shown in OCI, and those items have been defined by Ind AS in the respective topics. Okay, so profit and loss format is same. We have OCI, right? Under OCI we have 2 elements, R and NR. What is R and R we will discuss in detail under Ind AS 16, right? The total of P&L profits and OCI's profit is known as TCI, total comprehensive income, right? Apart from this, we also came to know one more element is that profit and loss is prepared for the year, balance sheet is prepared as on date, and also your normal profit gets accumulated in retained earnings, while your revaluation gain under the head of OCI gets accumulated under a separate head known as revaluation surplus. So under other equity, show everything as on date. And what will happen with this revaluation surplus at a later date when the land is sold, that we will discuss under the respective Ind AS, and that is Ind AS 16. So this completes. Ideally, now you can say that you had completed your first topic, which was named Introduction to Ind AS, which we studied the first half yesterday, and we completed Schedule 3 today. So this Introduction to Ind AS is also known as roadmap. Either you can say roadmap to Ind AS or Introduction to Ind AS and Schedule 3. So ideally we have completed this full topic now. So ideally in Hindi, whenever I complete a topic, so in Hindi we say sarak sarak sarak. What is the meaning of sarak sarak sarak? That means we have completed that topic. So ideally I went to Hyderabad once, right, for India tour. So the students of Hyderabad told me that the translation of sarak in Telugu or Tamil, I'm not very aware, is jardu jardu jardu. I might be wrong, but this is what I heard, right? So whenever we complete any topic, in Hindi I say sarak sarak sarak, and in maybe South Indian language it is known as jaradu jaradu jaradu. So we have completed our introduction to Ind AS and Schedule 3, and we have done it. Jaradu jaradu jaradu, right? So that means sarak sarak sarak. So you can remember that part. Okay, jarugu. Okay, jarugu, not jaradu. Jarugu. Okay, I will remember this. So see, at the end of this batch, we have 2 motives. I will teach you some Hindi words. You will teach me some South Indian language. Okay, you will teach me certain words, and please don't teach me abusive language. Okay, you might abuse me in the text, and I might also repeat it. But see, if I repeat any abusive language in some abusive words in some other language, forgive me, that was not from my side. Okay, I don't know about it. Okay, anyways, so thank you so much. Let's take a small break and we will resume after the break. So thank you so much. Bye bye everyone. Take care. See you all. See you after the break. Bye bye. Okay, so at what time do we resume, guys? We will start with Ind AS 16. Okay, we mentioned Ind AS 16 so many times in our lecture, so we will start with Ind AS 16 after the break. So let's resume at 7:40. 7:40 sufficient? I will leave you early, no? Come back at 7:40. Works? Okay, sir, works. So come back at 7:40. We will start with Ind AS 16. Okay. Thank you so much. Bye bye everyone. Take care. See you all. See you after the break. Bye bye. Welcome back after the break, guys. Welcome back. Shall we continue? Let's continue. Just confirm whether everything is proper once. Till then, I'll open my notes. Just confirm now everything is proper or not. Yes? Okay. Thank you so much for confirming. Let's proceed. So, welcome back after the break, guys. So, we have completed Introduction to Ind AS. We have completed Schedule 3. And now we are moving towards, ideally, you can say the first good chapter of FR. And that is Ind AS 16. Ind AS 16. See, from now onwards, you can say we are focusing on the main content of financial reporting. Now you will get the flavor of financial reporting subject, right? So, before starting, just let me tell you the approach with which I teach. Generally, before starting any topic, I prepare a chart so that you come to know which all topics are going to get covered, right? So, for example, you can see definition, recognition, measurement, component. So, in all, there are total 13 points. So, through this, you get an overview of the whole chapter. So, what all things we are going to cover in this topic, you can see through this chart, right? So likewise, we will cover each and every topic. Apart from this, also what I have done for you is I have also marked the important points. So sir, should we cover only these points? The answer is no. Initially we will cover everything, but before exam you have some time constraint, right? So you cannot keep on reading each and every point word by word. So the point which I have marked as important, you just need to focus on those points and solve the question which I tell you. Deal? Done deal. Okay, sir. Perfect. So let's proceed. Let's proceed, sir. So now we are starting with our topic, definition, of PP, and the topic name is Ind AS 16 property, plant and equipment. So would request you to open the notes. It is on page number 9.1, right? So chalo. So let's start with the discussion in 3, 2, 1 and go. So first of all, we will start with the point of definition. So how many definitions are to be discussed? There are in all 2 definitions to be discussed. Wherever writing is important, I will make you write in the notes. Wherever we can study from the textbook directly, we will mark it in the textbook itself, right? So the first definition is PP. So what does the definition of PP tell you? It says ideally it should be a tangible item. Now what is the meaning of tangible item? Let's say for example I have a phone, so you can feel it, this is tangible item, right? Let's say you have a remote, you can feel it, this is tangible item. So whenever there is any substance in any item, it is a tangible item. The second point is held for use. That what is the meaning of this? If you are going to use that product in your business, that is known as held for use, right? So if you are using it in your business, then only you will get covered under Ind AS 16. Let's say for example I have a mobile phone, this is a tangible item, but selling this is my business. I am holding this not for using it but for selling it. So if your intention is to sell it and it is your business, in that case this will not be PPE for you. In that case, what will it be known as? Can anyone tell me? In that case, if my intention is to sell it and my business is to sell it and not use it, perfect answer, in that case it will become inventory for me, right? So if you are using it, then only you will get covered under this Ind AS, otherwise it will become inventory. Perfect answer, right? Use it where? For production or supply of goods and services, whatever you produce, you can use it there, or for rental to others, or for admin purpose. Let's say if you have any staff and you have given them laptops or computers to work for your office purpose, so that is for admin purpose. So if you are using it in your business, you can call it PP. Of course, the last point is it should be expected to be used for more than one period. Now what is the meaning of this? Let's say for example I have some stationery items. Do you remember in accounts we used to show this printing and stationery items as an expense, but on the other hand I have a mobile phone also, right? Mobile phone, this mobile phone I show as an asset. Why? Why this difference between the accounting of these two things? The reason is simple. The benefit of this stationery I will get only for a less than 1 year, right? It will get consumed within less than 1 year, right? But the benefit of this mobile phone I will get for more than 1 year. Whenever you get any benefit from any item for more than 1 year, it becomes an asset for you. And when you get the benefit for less than 1 year, it becomes an expense for you. That is why for PPE to be an asset, you should be able to extract benefit for a period of more than 1 year. Is this clear to everyone? Okay, cool. Let's proceed further. So this was a definition of PPE. Apart from the definition of PPE, there is one more definition which is covered, and that is definition of bearer plant. To discuss this definition, we will have to write few points in the notes, right? So let's write NB example. What is the meaning of NB? NB means notebook. You are writing one example in a notebook. So let's open a notebook and write something. Let's discuss something, to be very honest. Okay. Also, what you can do is you can leave some space. You can leave some space in your notebook for this chart. Once the lecture is over, of course, I will upload the notes on your G Drive, Google Drive. So you can download the notes and prepare the chart, which will help you in revision also. Okay. Okay. So just leave one page and you can write it down. First point, which we are discussing, is bearer plants. First point is bearer plants, right? Which we are discussing. Now, to understand what is bearer plants, we need to understand one concept, and that is known as biological assets. Biological assets. Now, what is the meaning of biological assets? It means either if you have a living plant, or one more thing, which generally our parents consider us to be. Normally our parents, especially the parents of boys, do not consider their child as human. They consider them as animals. So biological asset means living plants or animals. Especially my wife and my mom dad consider me as dog. So we are animals. So even we are biological assets, to be very honest. Okay. So biological assets are two bifurcation: living plants and animals. So if you have any living plants or animals, those are known as biological assets, right? Sir, where do we have the discussion of biological assets? It is covered under a different Ind AS, that is known as Ind AS 41. If you want to write it down, you can write it down. This is defined under Ind AS 41, naming agriculture. Agriculture in Hindi, it is known as kheti badi. In Hindi, it is known as kheti badi, agriculture. Okay. Agriculture. Okay. Now, so biological asset has two bifurcation: living plants and animals. These living plants also have two bifurcation further. It can also be bifurcated further into two parts. One is bearer plants and one is non-bearer plants. One is bearer plants, one is non-bearer plants. Now, what is the meaning of bearer plants? Whenever you have a plant whose life is more than 1 year. Sir, let's give us an example. Example, mango tree, coconut tree, mango tree. Now, please don't play vegetables and fruits with me, okay? And whichever plant has a life of more than 1 year, you can say it is a bearer plant, okay? Example, mango tree. Let's suppose we can say example of mango tree. Okay, okay, cool. Now, these bearer plants are covered under Ind AS 16. These bearer plants are covered under Ind AS 16. Now, the main question will arise is why? Why will they get covered in Ind AS 16? Let's take an example. For understanding purpose, let's assume you have a machine which manufactures biscuits. Okay. So this machine, through this machine, you can manufacture biscuits for multiple number of years. Let's say for 5 years. For 5 years, you can manufacture biscuits. So this machine is a PPE for a company, no? It is a property, plant and equipment for a company. Likewise, for farmer, their mango tree is PP. Why? Their mango tree is like a machine for a farmer. How come? Because this mango tree will give mangoes for a certain number of years, right? So for a company where machine manufactures biscuits for a certain number of years, for a farmer, this mango tree will give mangoes for a certain number of years, right? So this is nothing but like a farmer's machine. For farmer, this is a machine, because the farmer will get what? It will get mangoes, right? That is why bearer plants are being covered under Ind AS 16. They are being covered under Ind AS 16. I hope you get this point. Clear? Okay. Acha, one more thing. See, like if in case we discuss, machine is covered under Ind AS 16, but biscuits are not covered under Ind AS 16. Biscuits might be covered under different Ind AS. Like if your intention is to sell this biscuit in normal course of business, this biscuit will be inventory for you. Likewise, we are talking about mango tree. Mango tree is a bearer plant which is covered under Ind AS 16, but not mangoes. Mangoes will be covered under different Ind AS, right? So ideally discussion of mangoes is done under Ind AS 41 only. So mangoes are covered, you can write, are covered under Ind AS 41. Sir, what about the other aspects like non-bearer plants? These are also covered under Ind AS 41. What about animals? These are also covered under Ind AS 41. That is why I defined the biological assets first. See, biological asset has one aspect of bearer plants. Only this aspect is covered under Ind AS 16. Other all items are covered under Ind AS 41. Right? So please prepare this chart. Please prepare it. Giving you 20 seconds. 20, 19, 13, 7, 1. Done. Okay, done. Clear? Guys, are you absolutely clear, guys? Okay, cool. Done. Do you understand? Okay. Now, likewise, we can read this definition. What does it say? It should be a living plant used in the production of agriculture produce. What is the meaning of agriculture produce? See, in our case, what is our bearer plant? Mango tree. What do we get from mango tree? We get mangoes. So mangoes is going to be our agriculture produce. Mangoes is going to be our agriculture produce. Of course, it is expected to bear produce for more than one period. That is why it is a bearer plant. If the life was less than 1 year, it would have been a non-bearer plant. And the fourth point is written as has a remote likelihood of being sold as agriculture produce. Now, what is the meaning of this point? This point simply means that you will not sell. You will not sell the tree. That means, see, let me explain it to you. In case of machine, your business is not to sell the machine. Your business is to sell biscuits which are manufactured from the machine. That is why machine is a PPE for you. You will use the machine, right? You will not sell it. Of course, at the end of the life, you can sell it for scrap value. But during the life of the machine, you will use it. Likewise, in case of mango tree also, your intention should be to use this mango tree and not sell this mango tree. If your intention is to sell the mango tree, then it will not get covered under Ind AS 16. Because then you are not using the machine now. Of course, you can sell the mangoes which are generated out of the machine. You can sell the mangoes. That is not a discussion point. We are discussing that you cannot sell the mango tree during the life of it. Of course, when the life is over, you can sell it as a scrap of wood. But during the life, your intention should be to use the mango tree. That is when it will get covered under Ind AS 16. Right? It is mentioned in this point. It has a remote likelihood of being sold as agriculture produce. But it is written that except for incidental scrap sales. What is the meaning of this? That is, as I mentioned, when the life is over, you can sell the tree as scrap, right? So you can write when the life is over. You can sell it as scrap. When the life is over, you can sell it as scrap. Is this clear to everyone? Perfect. Works for me. Let's proceed. So this was our definition. Definition of PPE and bearer plant. Now let's move on towards the second point, and that is the recognition criteria. Recognition criteria. Now what is the meaning of this? See, try to understand the flow of the Ind AS, right? So first of all, when you see, they have discussed the definition. What will come under the definition of PPE? Then they will discuss whether you should record such PPE in your balance sheet or not. First we define what is PP. Then we will say recognition criteria. That means whether you will record this PPE in your balance sheet or not. Then if you record it, the third point is measurement. When you're recording it, at what value will you record it? That is known as measurement. So first define it, then decide whether to record or not. If you're recording it, then at what value will you record? That is known as measurement. Definition, recognition, measurement. You should understand the chronology of this. First define, then record at what value? That is known as measurement. Also, measurement has two aspects: initial measurement, subsequent measurement. So what is the meaning of this? Initial means at what value will you record the PPE on day 1? That is the meaning of initial measurement. And what is the meaning of subsequent? At what value will you record the PPE at every year end? Subsequent. At what value will you record the PPE on day 1? Initial measurement. And at what value will you record the PPE on every year end? Subsequent measurement. Right? So now we discussed definition. Now we are going to discuss the recognition criteria. Recognition means when you will record the PPE. When the PPE is recognized as an asset in the balance sheet. We will record when two conditions should be met. One is future economic benefits. As I already mentioned that an item is recorded as an asset only when you are certain to get some benefits for more than 1 year. That is known as future economic benefits. Likewise, I took an example of mobile phone and stationery. For stationery, I'm not going to get future economic benefits for more than 1 year, right? That is why it is an expense. But for mobile phone, I will get the benefit for more than 1 year. So it is my asset. So if you are probable to get future economic benefits and if you can measure the cost reliably. Sir, why it should be measurable reliably? Because to recognize the asset, you need to record it at a certain value. At what value will you record it? It is known as cost should be measured reliably. So these are the two recognition criteria. These you might have studied in your inter also, but it is fine. These are not very difficult to remember. It is very simple, and these recognition criteria is same for all the assets, right? So PPE should be recognized as an asset only when there is future economic benefit and when the cost can be measured reliably. The next thing within recognition criteria is guidance. This guidance I will add as P. P means pending. We will discuss it on a later part. Okay. So we will discuss it later on. Okay. Now let's move on towards this. The next point is measurement. Next point is measurement. Now, under measurement, as I already mentioned, we have two aspects. One is initial measurement, one is subsequent measurement. What is the meaning of initial measurement? Initial measurement means on day 1, at what value will you record the PP on day 1, right? So initial measurement means recording the PP at what value on day 1. So now again we have to take a pinky promise that on day 1 all PPs will be recorded always at cost. Always at cost. Now what is the meaning of cost? What all things will be included in cost? That is our next concern. What all things will be included in cost? That is our next point, right? We know that on day 1 we have to record the PPE at cost. But what will be the cost of PP? What all expenses should be added to the cost of PP? Which all expenses should not be considered for the cost of PP? We will discuss that part now. Okay. For that, first we need to identify how did we acquire the PP. Whether you purchased the PP in a ready-made mode or whether you constructed the PPE on your own, whether you acquired it in a barter transaction. Likewise, I will give you a laptop, you give me a calculator. Or you acquired by way of government grant. Sometimes government sees that this person is very nice, I should give him a land, he will make best use of it. Sometimes government gives you an asset at a cheaper price or for free. That is acquiring the asset by way of government grant. So first, to measure the cost, you need to see how did you acquire the asset. Whether you purchased it, whether you constructed it, whether you acquired it by way of exchange or whether you acquired by way of government grant. Right? So first we will discuss the point whether what will be the cost if the asset is purchased. What will be the cost if the asset is purchased? This is our first point to be discussed, right? So what did purchase means? We bought it in a ready-made mode. Okay. So they are telling us to refer note number 1 and 2. Okay. So see note number 1. Components of cost if the asset is purchased. Components of cost if the asset is purchased. What all is included in cost? The first point is purchase price. But from purchase price, you will deduct trade discount and rebates. Now, what is the meaning of trade discount? Any discount which you give to everyone in ordinary course of business is trade discount. Likewise, rebate also. Any discount or any rebate which you give to everyone in normal course of business is known as trade discount. That is given to everyone. Let's say for example, you enrolled for my FR batch. The MRP of that batch for you was 14,999. But for all the students, I always sell it at, let's say, 12,999. This discount I give to everyone, irrespective of your attempt or anything, right? This discount is given to everyone. So what will be the cost for you? What will be the purchase price for you? Will you say that your purchase price is 14,999 or will you say the purchase price is 12,999? Perfect answer, you will say the purchase price for you is 12,999. Why? Because you will deduct any trade discount and rebates which is given to everyone in normal course of business, right? And for you the cost is also this only, 12,999, right? So the purchase price will, from the purchase price, you will have to reduce the trade discount and rebates. First thing. Second thing, you will add all the non-refundable taxes. Let's say, for example, one student had asked me this query. So this was a very good query which will help you clear this point. Okay. Let's say, for example, I go to buy a mobile phone. Not me. Let's say Supraja goes to buy a mobile phone. Okay. So when you go to a mobile shop, you ask what is the price of the mobile phone. They say it is 70,000 plus 18% GST. Plus 18% GST. That comes to 12,600, I guess. So the total price is 82,600. Okay. I am a poor guy. I don't have so much money to buy a phone. So of course you can buy, right? So you go to buy a mobile phone. They charge you 70,000 plus 18% GST, which comes to this much. Now the question is whether this tax will be included in the cost of PPE. So some of you might say yes, some of you might say no. But the real answer is it depends. It depends. Depends on what? If you can claim the credit of this GST, you know what the meaning of credit? You might have learned that in CA Inter. Credit means you can take the benefit against the GST payment to government. See, for example, you have made this payment to the shopkeeper, and let's say you have also a GST liability to be paid to the government. So you can take the benefit of this. If basically you can get a refund or credit of this, then this will not form part of cost. Because ideally you have paid it on one hand, but you can take the refund or credit on the other hand. So you will not add it to the cost. But, if you are not getting any refund, no credit, no benefit of this taxation to you, in that case you will add to the cost. That means to judge whether any tax will form part of your cost, you need to check whether it is refundable or not. If you are not going to get any benefit of this tax, you will add it to the cost of the asset. It is as simple as that. So this was the second point. First point was purchase price less trade discount rebate. Second point is add all the non-refundable taxes. Third point, you will consider all the directly attributable expenses. Now what is the meaning of this? Any expense which is necessary to bring the asset in ready to use condition. All the expense which is necessary to bring the asset in ready to use condition, that is known as directly attributable expense. Let me write it down for you. All expense necessary to bring the asset in ready to use condition. To make the asset ready for use, if any expense is necessary, you will add it to the cost of the asset, right? So some illustrative items are given here. So we will just give it a plain reading. So what all is included in directly attributable expense? So one comes as employee cost. So what is the meaning of employee cost? Ideally, this is not relevant when you purchase an asset. It is relevant when you self-construct an asset. So all the employees which are involved in the construction, the salary or wages given to them will form part of the cost of the asset. Second is cost of site. Now what is the meaning of cost of site? Let's suppose you are constructing a building. For that you purchased one land. So the purchase cost of land will form part of the total cost of the asset. That is known as cost of site. So when you're constructing anything on a certain land and you have to purchase the land, that land purchase cost is cost of site. So you will add that as well. Also, this is relevant when you're constructing it. Delivery cost, installation cost, right? So all these costs will form your directly attributable expense, right? No need to remember it. Just give it a plain reading. You will be able to recall it when you're solving the questions. Don't worry about it. The other point is cost of testing. Now this is something which I need to explain it through one example. So you will say NB example. NB means, of course, now by now you might be knowing, notebook mein we will discuss one example. Come. Let's give one heading in a notebook. Cost of testing. See, always you need to keep an eye on which point we are discussing. We are discussing what will form part of cost of the asset and what is a directly attributable expense. So in that we are discussing cost of testing. Always keep an eye on the fact what point are you discussing in this. Okay? Okay, sir. Got it. Let's proceed. Cost of testing. Now, what all expenses will form part of this? Let's suppose you have a testing expense to be incurred. So now what is the meaning of testing expense? Whenever you, let's say for example, I stay in Mumbai, okay? So in Mumbai, the construction of metro is going on as of now. Metro is basically, it is like a train only, but for local commuting, okay? So the construction of metro is going on, which is built by the government, right? So now tell me one thing, if metro construction is done, if metro is built, so as soon as it is done, can you really start it directly for public use, or you need to test it once? Of course you will have to test it once, right? You cannot start it directly for public use because it is dangerous, right? So for making it ready for use, you incur testing expense. For making it ready for use, you will have to incur the expense of testing, right? That expense is necessary to make the asset ready for use, to make the asset available for use. That is why such expense will get capitalized in the cost of asset, right? So let's say for example, I have a testing expense to be incurred of 1 lakh rupees. Okay. Now, what the government can also do is, let's say for example, government made a scheme, okay? So government said, we are conducting metro test rides. Okay, so let's say for example, we have Elton. Okay, we have Elton. So we have one student named Elton. So now what is to be done is, he has a girlfriend as well. So what the government did was, government announced a scheme that we are conducting a test ride. If you wish to attend, if you wish to sit in the metro during that test ride, you can just pay ₹1 and enjoy the metro ride. But you will have to sign a form where you will say that if anything happens to you, you are responsible, because this is a test run which is going on. So government won't be responsible. You by yourself are responsible. Okay. So government announced one scheme of ₹1, where there is a risk of life, but own guarantee. If you can take your own guarantee, you can come and enjoy the ride. Okay. So Elton along with his GF decided to enjoy the free ride. Why? Because girlfriend boyfriend in this age before marriage, they find it very difficult to meet. They find places very expensive also. If they can't go for a movie every night, they can't go for a movie every morning, it will consume 200, 300, 400 rupees. Also if the girlfriend asks for popcorn, then also it will become very expensive. So what Elton decided, that he will take his GF for this metro ride and they can spend some quality time in the metro. We can feel it, sir. Oh, nice. Okay. So what is the motive for the government to do all these things? The motive is, when they are testing, various expenditure is to be incurred while testing also. Electricity expense, the driver expense, right? The, let's say, maintenance expense during the testing, right? So to reimburse such expense, they can also announce such schemes through which they can earn some income. So we will call it testing income. Income which is generated during testing. So let's say by doing this scheme, likewise there were many girlfriends, there were many people like Elton who attended, and government was able to collect 20,000 of proceeds from this, right? So now at At one part, you are incurring an expense of 1 lakh. On the other hand, you are earning an income against this expense of 1 lakh. So your net cost is how much? Your net expenses, net cost is 80,000. See, we all know that testing is a directly attributable expense. But the question is, what amount will get added to the cost of the asset? Will I add 1 lakh to the cost of the asset, or will I add the net cost to the cost of the asset? The perfect answer is, because you are incurring 1 lakh, it is fine. But against this expense, you are also earning some income. So you will consider the net cost. You will consider the net cost and add it to the cost of the asset. So this 80,000 will be added to cost of PPE. This 80,000 will be added to cost of PPE. Is this clear to everyone? Can you guys tell me yes or no? Yes. Cool. Write it down. Giving you 10 seconds. Done? Perfect. Now, this is done. So we will add the net cost to the cost of the metro. Now there is one more clarification which was introduced in this aspect. There is one more clarification which was introduced on this point. What is this clarification all about? See, you will give the heading as clarification. Clarification. Let's assume you incur a testing expense of 1 lakh. Agreed. But is it possible that while earning some income during testing, your income exceeds your expenses? So your income is 1,30,000. So in previous case, expense was higher, so there was a net cost. In this case, your income is higher. So ideally, during testing, you haven't incurred an expense, but you have maybe earned an incremental income. So here there won't be any net cost, there will be net income of 30,000. Now, what is to be done with this net 30,000 income? Will we adjust this with the cost of the asset, or will we transfer this 30,000 to profit and loss? That is the question. That is the clarification which was introduced under this Ind AS, right? Whether this will be transferred to profit and loss, or whether this will be adjusted against cost of asset. But now the meaning of adjusted will not be adding to the cost of the asset. See, this income is reducing your cost. So adjustment means you will deduct from the asset. Either you have one option of deducting it from the asset, or you can transfer it to profit and loss. Tell me, what will you do? Perfect answer given by you. So ideally, even the Ind AS has given such clarification that because the income is of testing itself, you will not transfer it to profit and loss. You will adjust from cost of PPE, and also clarified that adjustment here means you will reduce the cost. Because see, while incurring cost, it is an expense for you, but this generates an extra income for you. So you will reduce from the cost of the asset. Perfect answer, everyone. Very good. Is this clear? Okay, cool. See, okay, you can write it down. Done? Cool. Let's proceed further. See, it includes employee cost, cost of site, delivery, installation, cost of testing. Cost of testing is less proceeds from the sale of product arising from test production. That means testing income. You will reduce it. Okay, notebook my example we have already discussed. Apart from this, there is professional fees. So what is the meaning of professional fees? Sometimes whenever you purchase an asset, you have to incur some registration charges or legal fees, right? So you will consider it as a professional fees to be added to the cost of the asset. Okay. There is the amendment. Yes, Nishita, that applies. Okay. There is amendment clarification released that the excess of net proceeds will be deducted from the cost of the asset. Excess of net proceeds means if your testing income exceeds your expense. That means even this point we have discussed in our notebook. You can write it down. This clarification has been discussed in our notebook. Simple. Clear? Okay. Now, what did we study now? What all expenses will form part of directly attributable expenses. Now, what are we going to discuss? What all expenses will not form part of directly attributable expenses? Which all items will not form part of directly attributable expenses? Does not include inauguration expense. Now, what is the meaning of inauguration expense? See, these are basically those expense which are not necessary for the asset to make it ready for use. For example, inauguration. Let's say, for example, I build a metro. It is ready for use. But for inauguration, I called Mr. Rahul Gandhi. Rahul Gandhi is my favorite politician. So I called him for ribbon cutting. I told him, please, Rahul Gandhi ji, come and cut the ribbon, and I make this occasion very prosperous. So he came and cut the ribbon for this. For that, he took some political contribution from me. That is known as inauguration expense for the company. So tell me, is this inauguration expense relevant for the asset to make ready for use? Even if Mr. Rahul Gandhi wouldn't have come and cut the ribbon, still the metro would have run, na? That is what I'm trying to tell you. Such expenses are not necessary to make it ready for use. So such inauguration expense, advertising, promotional cost, training cost will not form part of the cost of asset. Sir, why training cost will not form part? The reason is, even if you don't give training to the employees, still the asset is operational, right? The asset is ready for use, right? Same applies to admin and other overheads, initial operating losses, cost of relocating entities operation. What is the meaning of relocating entities operation? This means, let's, for example, suppose you are transferring your plant from, let's say, Mumbai to Chennai. So this is relocation expense. Even if you don't relocate, still you can use the asset, right? That means this cost is not necessary to make the asset ready for use. Of course, you have decided to use it at a new destination, but that, even if you don't decide it, you can use the asset anywhere. So such cost of relocation will not form part of the directly attributable expenses, right? So these are very basic examples. But one point which is important in this is that this one. For this, I will discuss one example here. See, what does this point say? Let's discuss the example and then we can read it, okay? Let's, for example, say I have a land on which I am going to construct a building. I purchased the land for construction of building, but construction not yet started. The construction is not yet started. Okay, so as of now the land is idle. So what can I do with this idle land? So generally what people do is, one of the things which I can do with this land is, in Mumbai it is very famous. Okay, what they do is, whenever there is any idle land, they create it a parking site. They create a parking site out of it. So they created a car parking area out of it. They made it like a car parking site till the construction resume, till the construction of building starts, right? So of course the motive behind making it a car parking site is earning some miscellaneous income. So they will earn some miscellaneous income. Now the question is, such miscellaneous income will be adjusted from the cost of the asset, or will it be transferred to profit and loss, right? Tell me. Just imagine, even if we don't make a car parking site out of it, still the construction can be done, right? The motive behind this was not to do any testing. We are doing this just to earn some miscellaneous income. Irrespective of this also, we can still construct our building. So this creation of car parking site is not necessary to make the asset ready for use. So such miscellaneous income will be transferred to profit and loss. Sir, but there can be a confusion. Then why did we consider testing income while capitalizing the cost? Please try to understand. Testing income was considered because even testing expense is getting considered in the cost of the asset. So ideally, we are, in case of testing income, what we are doing is, because we are capitalizing testing expense, from such expense we are reducing the testing income, right? But this is not an income of testing. This is a completely miscellaneous income. So you will have to transfer it to profit and loss. So if that question tries to confuse you, confuse you by giving any such miscellaneous income, please do not adjust it from the cost of the asset. Okay. Last point is, if there is any cash discount, you will have to transfer it to profit and loss. Sir, what is the meaning of cash discount? Let's say, for example, you come to me and say, sir, I want to buy FR batch, but I will pay the fees upfront in cash. Upfront I will pay. And there is one student who says that I will pay fees after 2 years. Okay. So just because you are paying the fees upfront, I am giving you a discount of 1000 rupees. Such a discount won't be adjusted against the cost of the asset. Such discount will be transferred to profit and loss. Okay. But if it was a trade discount, then we would have deducted it from the cost of the asset. But if it is a cash discount, you will transfer it to profit and loss. Always remember this point. Okay. So this was the components of cost if the asset is purchased. I hope this is clear to everyone, right? Now the last point is remaining in the components of cost if the asset is purchased. We will discuss this. Okay. But before the discussion, I does not include means, Nishita, you have to transfer it to profit and loss. Basically, you have to ignore this. Yes, you can say that, Nishita. Okay. Before moving forward, I am giving you 30 seconds to revise the components of cost of the asset. Once the revision is done, you will mark D in the chat box. Okay. Then we will discuss this fourth point, that is cost of decommissioning. Time starts now. Please revise everything once, whatever we studied now. Okay. Please revise it. Time starts now. When done, please write D in the chat box. Okay. Please start. Done. I guess, Nishita, you are asking one more thing, whether this is applicable for November 23. I would like to highlight that this batch is mostly for new syllabus. And on YouTube, we are conducting only first 2 or 3 sessions, right? So you can attend that. But till November 23, this batch also won't get over. So I would not recommend to enroll for this batch. Of course, you can see the initial lectures till whenever it suits you. Okay. Clear? Okay, sir. Now let's discuss. Okay. We discussed 3 points. The first 3 points are done. Now let's discuss this fourth point, which will also form part of the cost of the asset, right? Let's see this. What does the D point tell us? See, we are still under this point. What will be the components of cost if the asset is purchased, right? Under this point, we will discuss now this one. Cost of decommissioning, dismantling and site restoration at present value. Now, what is the meaning of this? What is the meaning of cost of dismantling, decommissioning, site restoration? So what we will do is, we will take one example. So write it down. We will discuss one example in notebook. Okay. Okay. So let's open the notebook and discuss one example here. Just give the heading. Decommissioning. Decommissioning. Dismantling or site restoration. Or site restoration. Okay. Decommissioning, dismantling or site restoration. Now, what do we mean by this? Let's try to understand with the help of an example. Okay. Let's say we have a machine. This machine is useful for mineral extraction. Okay. This machine is useful for mineral extraction. Okay, sir. Now, where will you extract the minerals from? So what you do is you go to the government and government gives you a land. In this land you will install your machine. Let's say I've installed the machine inside this land, in underground I have installed this machine, and from here you can extract the minerals. For how many years? For 5 years. So basically this land belongs to the government. Government will give you permission, will grant you permission, so that you can install the machine in this land and you can extract the minerals for a period of 5 years. But government will allow you to do this only on one condition. Only on one condition, and that condition is you will have to restore the site. You will have to restore the land or site after 5 years. So what is the meaning of this? See, by installing the machine, you must have caused some damage to the land. So when your work is done after 5 years, you will have to rectify the damage. You will have to restore the land after 5 years. And this is compulsory to be done. If you refuse to do this, government will not allow you to extract the minerals from this area. Okay. Now, tell me one thing. When you restore the land, will you have to incur certain expenditure? Yes or no? Of course, we'll have to incur certain expenditure. But the restoring expense will have to be incurred on day one or after a period of 5 years. The expense for restoring the land has to be incurred on day one or after a period of 5 years. Perfect answer, we have to incur that expense after 5 years. We have to incur the expense after 5 years. Now my next question is whether it is a directly attributable expense. Whether it is a directly attributable expense. Whether you can call it a directly attributable expense. Yes or no? So some of you are answering yes, some of you might answer no. Yes. Thank you so much, Vaibhav. Yes. What will your answer be? Whether is it a directly attributable expense? Let's try to understand this. Tell me one thing. Is this expense necessary to make the asset ready for available for use? The answer is yes. You might say no. It is not necessary for making the asset ready for use, but you cannot use the asset if you do not promise to incur this expense after 5 years. You do not have the permission to use the asset if you are not promising to incur this expense after 5 years. That means on the face of it, you might see that, you might feel that it is not a directly attributable expense, where indeed it is. Why? Because to use the asset, the usage of the asset is only mineral extraction. And to use this asset, you have to promise to incur this expense after 5 years. So ideally, this becomes a directly attributable expense. Yes, it is a directly attributable expense. Why? Because if you want to extract minerals, you will have to incur this expense. If you want to extract the minerals, you will have to incur this expense. There is no other remedy available with you. That is why this becomes a directly attributable expense. And if it is a directly attributable expense, then will this expense be added to the cost of the asset? The answer is yes, added to the cost of the asset. But an issue might arise in your mind, saying that, sir, this expense is to be incurred after 5 years, then how can we add this expense on day one to the cost of the asset? Now apply your logic of time value of money. See, any amount which is paid after 5 years is not comparable with the amount which is paid on day one. So we will have to add this to the cost of the asset. But at what value will we consider this in the cost of the asset? Perfect answer, we will consider this at present value. Why present value, sir? Because This amount is to be incurred after a period of 5 years. See, 100 rupees paid after 5 years is not same as 100 rupees paid on day 1 because of inflation, because of interest, because of time value of money, right? That is why this expense which is incurred after 5 years will be added to the cost at present value. Another issue might arise is that how can we come to know the expense after 5 years today? Likewise, for example, how can we know today that how much amount we will expense out after 5 years? So this, in here we will require an estimate. That estimate will be given in the question. You need not worry about it. Okay, so let's take one example here. So this was the basic fundamental. Okay, this was the basic logic behind why do we add this amount to the cost of the asset, and why do we add it at present value. Here is the logic. Okay, yes, clear? Okay, now what do we do is we take one example to discuss this decommissioning aspect. Okay, so let's write down one example. Let's say asset is purchased for 10 lakhs for rupees 10 lakhs. Okay, decommissioning slash you can say dismantling slash you can say site restoration, all things mean the same. Okay, to be incurred after 5 years. To be incurred after 5 years is, let's say, 5 lakhs. Okay, discounting factor is, let's say, at the rate 10%. What do I require from your side is you will give yourself around 20 seconds, and what I require is what will be the cost of PPE on day 1. What will be the cost of PPE on day 1? This 10 lakhs will form part of cost, and what is to be done with decommissioning amount. Okay, please, what will be the total cost of PPE on day 1? Time starts now, giving you 20 seconds. Total cost of PPE. Perfect answer. It is 10 lakhs plus. See, this 10 lakhs will form part of cost. What about this 5 lakhs? This will also form part of the cost, but at what value? At present value. But at present value. Okay, so what is going to be the present value of this 5 lakhs? It is going to be 310461. Thank you, Sumit. 310461. So you will say 5 lakhs divide by 1.10 raised to 5. Through this you will get this amount of 310461. Okay, okay sir, got it. So the total cost will be 13,10461. See, the more you try to find the answers in the class, the better it will be for you in exams also and while revising also. So it depends on you. See, if you're not putting that effort, it doesn't matter to me, to be very honest, right? If you want to excel in your studies, if you want to come in that top 10-15%, you have to put in that extra effort which others are not doing. Maybe let's say 500 students are attending this class, let's say for example, right? But out of those 500, maybe only 50 might be answering. Those are the 50 who have the highest chance of clearing the exams, right? Always keep that thing in mind. So always try to answer as much as possible in the class. Even if it is wrong, it doesn't matter. Just try to answer. That is more important. Okay. So the cost of PP is 1310,461. Now let's try to visualize the entry on day 1. What will be the journal entry on day 1, sir? Let's try to visualize this. Okay. So we will say PPE account debit. So we will record the PPE at cost 13,10461. We will say to cash bank account. But ideally on day 1, we haven't incurred the full expense of 13,10,461. We have only incurred 10 lakhs expense. So what about this 310461? Ideally, For this, we will have to create a provision for decommissioning. Sir, why provision? Basically, we are creating a liability. Why? Because this amount we know we have added to the cost of the asset, but has not yet been incurred till now. That is why we will create a provision out of it. Okay, so we will say 310,461. 310,461 will be your amount of provision. So this is the entry which you will pass on day one. See, ideally, this doubt won't arise on day one, but maybe after passing the entry, you will try to visualize, oh, हाँ sir, we have to create a liability also. Why? Because you haven't incurred, you haven't made the payment for this as of now. That is why. Okay, okay, so done. This was a day one ka entry. The discussion is not yet over. Tell me one thing. Keep your hand on your heart. In Hindi we say दिल पे हाथ रख के बताओ. In Hindi heart means दिल. Keep your hand on your दिल. Keep your hand on your heart and tell me one thing. We might have created a liability of 310,461, but after 5 years, in the name of decommissioning, do we have to pay 3,10,000 or do we have to pay 5 lakhs? Again, I will repeat my question. Keep your hand on your heart and tell me, you have created a liability of 3,10,000 today, but after 5 years, will you have to make a payment of only 3,10,000 or will you have to make a payment of 5 lakhs? Perfect answer. We will have to make the payment of 5 lakhs. But the issue here is we have only created the liability of 3,10,461, but the payment is to be made of 5 lakhs. Are you understanding my point? So now what is to be done, sir? So let me explain. Let's say your provision ka present value on day one is 3,10,461. After 5 years, very good answer, very good answer. After 5 years, your future value at the 5th year is 5 lakhs. So what you will have to do, my friend, you will have to take your day one ka present value and move it towards the future value. From 3,10,000, you have to keep moving towards 5 lakhs. That means the procedure from going from present value to future value across a certain period is known as unwinding. Unwinding of interest. This process of going from present value towards future value during these 5 years is known as unwinding of interest. Why this unwinding is required? Because as I said, we had to make the payment of 5 lakhs, but we have booked only 3,10,461. Sir, why did we book only 3,10,461? Because this is the present value on day one. This is the present value on day one. And in the cost of asset, we only add the present value. Clear? So now how do we do the unwinding, sir? And the procedure of unwinding is very simple. Okay, let me explain it to you. We just have to prepare our working note naming unwinding. See, basically, you know what is unwinding? It is nothing but adjusting inflation with the passage of time. Your present value today is equivalent to 5 lakhs after 5 years. Simple, right? So we have to do unwinding of interest. On provision for decommissioning. On provision for decommissioning. So we will say year 1, 2, 3, 4, 5. Opening provision 3,10,461. Interest at the rate 10%. So you will add interest at the rate 10%. This is nothing but unwinding. So what we'll have to do is you'll have to apply 10% on the opening amount, right? So you will get the amount as 310,461. So we'll get the closing amount as well, 310,461 plus 10%. So I am taking rounded off figures, okay? 341,507. Then you will say 341,507. Again apply 10%. I am rounding off it to 34151. Okay. The closing you will get as 375658. Then the closing of year 2 becomes opening of year 3. So you will say 375658. Apply 10% to it, 37566, right? Then the closing will be, thank you for the answer, 413224. Then this closing becomes opening 413224. Over this opening apply 10%, that is 41322 maybe. So this becomes 454546. So you will take 454546, apply 10%, 4545, let's say 4 only. Total will be 5 lakhs approx. Of course, don't fight over 1 or 2 rupees, it is fine, right? Don't fight over 1 or 2 rupees, it is fine. But the approximate total comes to 5 lakhs. Can you see the magic of unwinding? You automatically went from present value towards future value. You automatically went from the liability of 3,10,461 to the liability of 5 lakhs. So every year end, you will have to pass one journal entry for this. You will have to pass a journal entry for this. Every year one journal entry will be passed. So I will just write every year you will have to pass a journal entry. So what will be the entry for this? See, by unwinding you have to tell me one thing. The process of unwinding, the logic of unwinding is to increase the liability or decrease the liability. So ideally we want to grow from 3 lakh 10 to 5 lakhs. So we want to increase the liability. Do you know the basics of accounting? I might sound very, we can say, childish, but you might know this. See, all the assets always have a debit balance. So to increase any asset, we will always debit it. Similarly, liabilities always have a credit balance. So to increase any liability, always credit it. So we want to increase the liability each year. So we will credit the liability each year, right? So let's say at the end of 1 year. See, on day 1, you already passed an entry, PPE to bank to provision. Now we are passing the entry on year 1 end. That will be interest expense to provision for decommissioning. See, we have credited the liability because we want to increase it, and we debited the interest expense because it is unwinding of interest, that is unwinding of, you can say, time value of money across the period, right? So interest expense, such interest expense will go to profit and loss, and such to provision for decommissioning will increase the amount of decommissioning, right? So what will be the amount? The first year amount will be 3,10,46, sorry, 31,046. This is the amount on year 1 end, right? Similar entry you have to pass each and every year. This entry you passed for year 1, similarly pass for year 2, year 3, year 4, year 5. So I will pass on my own, you will try to pass the entry on your own as well. So on year 2 end, you will pass the same entry. See, I have the luxury of copying and pasting it. You don't have such luxury, okay? You have to pass it on your own. 34151, 34151, okay. On year 3 end as well, you will have to pass this entry. Amount will be 37566. 37566, okay. Year 4 end, you will have to pass a similar entry again. Amount will be 41322. 41322. Year 5 end, again you will pass this entry. Amount is going to be 45454, 45454 and 45454, right? So we passed this journal entry at the end of each year. So see the magic. See, you created a provision of 3,10,461 on day 1. Then you pass the entry of unwinding each year. If you add all the amounts of these provisions, day 1 provision amount and all the unwindings amount, it will automatically come towards 5 lakhs. It will automatically come towards 5 lakhs. And now what is to be done at the end of 5th year? We also have to make the payment of this 5 lakhs now. So on year 5th end, we will have to make one payment as well. Year 5 end, one additional entry will come for payoff of provision for decommissioning. So this is the year in which finally we will incur the expenditure. So what entry will pass? The provision will get reversed, and we will say to cash bank because we are making the payment. Amount will be how much? 5 lakhs and 5 lakhs. Amount will be how much? 5 lakhs and 5 lakhs. I hope this is done and dusted for each and every one of you. Clear? Is this absolutely clear to everyone? Yes, this was the accounting of decommissioning which you need to follow. If you want, you can take 10 to 20 seconds to reflect on this accounting and revise it once, and then we can continue. Then we can wrap up the session, wrap up the today's session, right? Perfect. See, is this clear? Just tell me clear or not. See, I'm not asking you whether you will be able to solve this on your own again, but during class, your motive should be at least were you able to understand what we were doing, right? That should be our motive. Clear? Absolutely clear. Okay. One last thing which I want to tell. See, this 5 lakhs was the estimate of day one, right? That means on day one, if we are standing, we are estimating that our expense after 5 years will be 5 lakhs. So some student might ask that, sir, what if our estimate is not the same as actual? What if instead of 5 lakhs, we had to incur 8 lakhs? What if instead of 5 lakhs, we had to incur 3 lakhs? What if instead of 5 years, we have to incur after 10 years? What if some change happens? That point is discussed in this concept, changes in decommissioning. So as of now in this example, see, we are climbing the conceptual ladder step by step. So as of now, don't think about that what will happen if the estimate is not same as actual. That we will discuss later on. As of now, just focus on understanding the basic concept of this. So I hope you understood the basic part of it. Okay. So I guess for today we can wrap up the session here. We will continue from tomorrow below this point. But before wrapping up the session, how about revising Ind AS 16, whatever we studied today? Because this is going to be very important for us as well. Okay. So why not start the revision of Ind AS 16 in 3, 2, 1 and go. So the number was Ind AS 16, name, property, plant, equipment. So initially we started with the discussion of definition of PPE and definition of bearer plants. So the definition of PPE consists of 3 elements. One, it should be tangible items. Second, it should be held for use. Third, it should be expected to be used for more than one period. Right. Apart from this, we had a discussion of bearer plant. So now what is the meaning of bearer plant? So the element of bearer plant ideally came from the biological assets. What is the meaning of biological asset? Living plants and people like you and me, animals, right? So living plants and animals are biological asset. Living plants has 2 bifurcation further, bearer and non-bearer. So any plant which has a life of more than 1 year is known as bearer plants. So such bearer plants are very much similar like a machine for a farmer, right? So such bearer plants are covered under Ind AS 16 only. Apart from this, do remember, from bearer plant, you might get some produce like mangoes. That mango is not covered under Ind AS 16. Only the mango tree is covered under Ind AS 16, right? Next, the recognition criteria. To recognize any asset, you need to fulfill 2 conditions. First is future economic benefit should be certain and cost can be measured reliably, because to record any asset, we will have to record it at a certain amount. So the amount on day 1 is cost. Therefore, cost should be measurable reliably. This part is pending. We will discuss later on. Then we move towards the first point of measurement. Measurement, in that we discussed initial measurement. What is the meaning of initial measurement? Initial means on day 1, at what value will you record the asset? So on day 1, you will always record the asset at cost. So now what are the elements which should be included in the cost of the asset? So we started discussing this. First is purchase price less trade discount rebate. Then you will add all the non-refundable taxes. Then you will add all the directly attributable expenses. Indirectly attributable expenses, if there is any cost of testing, you will net off the income from that and add it to the cost of the asset. If your income exceeds your expense, then such income will be deducted from the cost of the asset. Apart from this, the following expenditure will never form part of the cost of the asset. Such expenditure is to be transferred to profit and loss. Cash discount, if any, will be transferred to profit and loss. Income from any car parking transferred to profit and loss. Apart from this, the last element which will form part of cost of the asset is cost of decommissioning. What is the meaning of decommissioning? Any expenditure which is a directly attributable expenditure, but which is to be incurred after a certain number of years. So we will add to the cost of the asset because it is directly attributable, but because it is to be incurred after a certain number of years, we will add it at present value, right? So we will add at present value. So while passing the entry, we will record the asset at total cost to cash bank, and the amount of decommissioning at present value will be recorded as a provision. But now the issue is we recorded the provision at present value, but we have to make the payment at future value. So the procedure from going from present value to future value is known as unwinding. So every year we will do unwinding of interest. The entry for unwinding will be interest expense to provision, right? So every year you will pass this entry, and at the end of 5th year you will pass the entry for paying off the provision, that is provision account debit to cash and bank. So I hope this revision was helpful for you guys. I hope you will revise tomorrow and come. Please remember, revision is going to be the key. Revision is going to be the differentiator between the students who will clear and the students who will not, right? So you have to revise it on a daily basis. And if you have any queries, you in the Google Drive, you always have my doubt support ID, Telegram ID. You can ask me the doubts, right? I will reply it as soon as possible, but please revise it. That is the key. I'm telling you, you have to revise it. And tomorrow also when you are coming, I will ask you whether you have done the revision or not. So please revise it on a daily basis. Thank you so much for being so interactive in the class. Thank you for replying. That will help you and only you to clear your exams. Okay. So thank you so much. Keep working hard. See you tomorrow at same time, and do revise the content. Thank you so much. Bye-bye everyone. Take care. See you all. Bye-bye. One student had asked a doubt whether unwinding of interest is same as compounding interest. You can call it that way. Yes, you can call it. It is very much similar. Okay. Thank you so much. Bye bye.